Good morning, afternoon, and evening, I guess, everyone. And thank you for joining us for this quarterly policy update. We're doing this, of course, in partnership both with ourselves at Carbon Gap and Remove. We've been running these updates for some time, and if you haven't already, I would encourage you all to go and follow both Carbon Gap and Remove on LinkedIn so that you don't miss out on the next session. As well as a mountain of other content that will help you navigate the complex world of both climate and carbon dioxide removal. My name is Philip Wilson, and for the last 3 years, I've been the Chief Operating Officer at Carbon Gap, and I have the pleasure of hosting you today. Before I introduce our experts who are going to guide us through today's session, just a few housekeeping notes. First and foremost, we love nothing more than questions, really difficult ones, please. And so familiarize yourself with the Q&A section in Zoom. There is a chat as well, but there's a little box at the bottom if you look closely, which says Q&A on it. And we would love it if you would add your questions there. Please add them as they come up. And at the end of the first, or rather the third actually presentation, we're going to go to our first Q&A section and we'll try to answer as many as we can. We'll pause for questions after the final section as well. So again, please don't wait until the very end, just pop them in there as soon as they come up. So we've got a packed agenda for today, and so we'll make the entire session available on our YouTube channel so that you can share or watch back later. And I'd love to encourage you all to please share it on your socials, as obviously these are topics that touch on policy and industry and research and innovation, and it supports the scale that we very, very urgently need. The good news is that it's almost Friday, which is tomorrow, thankfully. It feels like a very long week. I don't know about you all. The better news is that summer is almost here. And the even more exciting news is that today we're going to hear from our in-house experts, Rodica and Eloisa. So I'm going to start by passing the microphone over to Mateus at Remove, who's going to introduce themselves.
Thanks, Philippi. Happy to be here. So we are Remove, a nonprofit organization that runs an accelerator program in Europe. We recently started in India, expansion globally, and now to Sub-Saharan Africa. We've accelerated over 160 startups so far, and we also help build CDR ecosystem. So we have done this quarterlies for a while now with Carbon Gap. So happy to be here. Philip, going back to you.
Fantastic. Thank you very much for the intro, and thank you again for organizing this consistently on a quarterly basis. I know everybody finds it useful, and just a reminder, it is going to be on YouTube afterwards, so there's a lot of content to unpack, so if you want to go and watch it again, please do. Now to the agenda. In reverse order, Eloisa is going to give her expert view on financing the Industrial Decarbonisation Bank, which I find impossible to say, as well as zooming out to look at the kind of broader funding landscape with the European Competitiveness Fund. I don't know why they have to make these titles so complicated. After both of Eloisa's sections, we'll pause for the Q&A that I mentioned a moment ago, and a reminder again to please type your questions into the Q&A section. Eloisa, who is a policy expert at Carbon Gap, is currently focused on funding. So Eloisa, if you could give us an introduction to yourself, please.
Yeah. Hi, good afternoon. Thanks, Phil, for that. So my name is Eloisa. I'm a policy analyst at the Carbon Gap. I've been at Carbon Gap for almost 3 years now, and I lead our work in RD&I, so research development innovation for carbon removal and research development innovation funding. I work a bit on industrial policy as well, and I'm happy to be here today.
Fantastic. Thank you very much, Eloisa. Very much looking forward to this. Last, and I have to say, I'm legally obliged to say, by no means least, we will kick off this session with Rodica, who is going to guide us through harnessing the Clean Industrial Deal, as well as looking through the lens of opportunities for CDR in another word I can't say, the Industrial Decarbonisation Accelerator Act. Wow. Rodica is the policy director at Carbon Gap and has been with us since the very first days of our policy unit in Brussels. And so, Rodica, please introduce yourself and then take us away with the first section on harnessing the Clean Industrial Deal.
Thanks a lot, Phil, and thank you very much, everyone. Indeed, Industrial Decarbonization Accelerator Act. For my sake, and for everyone's sake, I'll just call it the IDA. Hope that's short and sweet. But yeah, pleasure to be here today. I'm Rodica. Have been with Carbon Gap for almost 3 years as well. And I'm focusing in my work on the pillar that we have internally called governance and standards. So that includes CRCF implementation, that includes claims and green claims right now, quite a hot topic, and several other issues. Most notably, I would say separate targets as well. So very excited for whatever the Commission is going to put forward for the review of the climate law. And at the same time, leading our work on what we call support supply. So that's indeed industrial policy and any kind of funding opportunities to scale CDR. But I'll not spend a lot of time talking about myself. I'm actually here to talk about many other things. So we're gonna start with, okay, should be able to share my screen. You should be able to see it now. I see people nodding, that's great. So Phil already provided an overview of what we're gonna be talking about today, but again, as a summary, we'll start with the Clean Industrial Deal, which is the big sort of strategy that the Commission has proposed to guide its new mandate. And then we're going to dive deeper into a few of the pillars or the initiatives that fall under this strategy. That's the IDA, that's the Industrial Decarbonization Bank, and the European Competitiveness Fund. We're going to start now with the Clean Industrial Deal. So what is this Clean Industrial Deal that everyone is talking about? I think the easiest way to think of it is like a more pragmatic cousin of the European Green Deal. So of course, now we have a new commission mandate, and we need this new 5-year strategy that will guide the EU policy making. So the new commission wants to do with this Clean Industrial Deal, in a way, a software update of the EU industrial policy. So on the one hand, it aims to deal with older bugs like lagging competitiveness and issues around supply chains, but at the same time install new features like more support for clean tech, good news, resilience, and more jobs. So overall, not at all an easy endeavor, I would say. And what is the focus or the target of the Clean Industrial Deal? It's twofold. On the one hand, it's really supporting energy-intensive industries, that is steel, cement, chemicals, and so on. So really the sectors where decarbonization is not just a climate necessity, but really also an economic opportunity. And this is how the Commission tries to frame all the initiatives focused at energy-intensive industries, but at the same time also support for the clean tech sector, which is the good news for CDR. So the goal of the Clean Industrial Deal is in a way elegant in the way in how simple it is. So align competitiveness with climate goals. And the good news also is that there's some money involved. So over 100 billion should be mobilized, both from public and private funding mechanisms. If you want to know more about the Clean Industrial Deal, and I'll talk to you more in a second, but you can find here the QR code for our entry into our policy tracker. So the policy tracker is our online tool, which offers a range of different sort of deep dives into different EU-related initiatives. It also tracks developments at some member states and country level. So overall, a really fascinating CDR dedicated tool that I invite everyone to have a look at. And then we have an entry dedicated to the Clean Industrial Deal there as well. Now, moving on, that's a snapshot actually of what you will find in the policy tracker. So just to take a step back and to try to wrap our head around what is this Clean Industrial Deal, from what we've seen the Commission propose, it should be like a game plan which has 3 strategic axes. So you see all 6 of them, sorry, not 3, 6. And you see all 6 of them here on the slide. So first of all, improving access to affordable energy. So right now, of course, energy prices are quite higher than in global competitors. And the Clean Industrial Deal proposes this Affordable Energy Action Plan, which is aiming to faster permitting for renewables, to modernize grids, and to ensure smarter electricity markets. And then the second one, which probably is the most interesting one for CDR, it's what they call driving supply and demand in lead markets. So the clean industrial deal supports this idea of lead markets, so strategic new markets that can shift supply and demand towards more sustainable, low carbon, circular products. And to do so, it will put forward several key actions. First, and this is where CDR is mentioned, the Commission in the Clean Industrial Deal stresses that we need to create a business case for carbon removal. And it mentions the potential integration of permanent CDR into ETS after the revision that is upcoming next year. Second one, again, under this driving supply and demand for lead markets, we have the review of the public procurement framework to support sustainable industries. And third, the introduction of this Industrial Decarbonization Accelerator Act that I will tell you more about a bit later. Now, going back to this core axis, we have mobilizing public investment to catalyze private funding. So as I was mentioning previously, 100 billion is the headline figure, so to say, but the real goal is leveraging that to crowd in private capital. And that's why we have this industrial decarbonization bank that could offer grants, concessional loans, or guarantees. Eloisa will tell us all about it later today. But of course, it's not just about money, it's also about confidence. So if the EU backs something, the market should trust it. That's the hope. Then quickly into axes 4, 5, and 6. So 4 is fast-tracking circular economy development. So here, the Clean Industrial Deal supports circular business models. So reuse of industrial byproducts, repair hubs, material passports, and so on. Then international cooperation and global markets for clean tech. Of course, we're not alone, and that's great in many ways. So Europe will not win the clean tech race alone, but it can lead it, or it can be part of the leaders of this race. And that's why the Clean Industrial Deal aims to boost EU experts of clean technologies and shape global standards that should match EU values. And last, promoting skills and skill transfers and quality job creation. So the energy transition shouldn't be just green, should be just as well. That's one of the pillars of our strategy that we published already almost 2 years ago. But long story short, the Clean Industrial Deal will propose a quality jobs roadmap. So a series of reskilling programs, apprenticeships, and clean industry and long labor standards. So this is to look in general at the Clean Industrial Deal and what it should entail. If you look at the publication of the Commission, of course, it's a very long list of different initiatives. You can easily get lost in it. What we've done at Carbon Gap when we saw it, of course, is to try to understand what would be the initiatives that would, where is CDR as part of it, and how can we leverage different initiatives to make sure that CDR is not just an afterthought, but is actually at the core of this industrial decarbonization and clean tech sort of revolution, if you will, or evolution rather. So we were asking ourselves, so what does this Clean Industrial Deal mean for CDR? What are the implications and what are the possible opportunities? As I said, the Clean Industrial Deal gives CDR a nod, but it's not really like, it's more like, the type of nod that you give a person that you know when you see them at a party. It's really not the kind of big hug that we wanted to see, but I am not losing my hope because on the good side of things, the Clean Industrial Deal calls or stresses that carbon removal is essential for net zero, especially in those hard to abate sectors. But, how to actually do it, there isn't so much in the text itself that we have right now. And spoiler alert, we will, of course, need much more than ETS integration. Compliance is very important. I'm sure we will talk about it at later instances, but it's something that we see coming a little bit further down the line. But right now, we need deployment incentives and ways for governments to support scale up of CDR in this 5 to 7 years gap. So we were looking at what could be the possible hooks for CDR within the Clean Industrial Deal. So here are a few of them. First of all, the EIB could potentially underwrite long-term power contracts, which could be a good news for SMEs that are running DAC or BECS plans who would like a bit of price predictability. Then there's this idea, and I'll talk more about it when I deal with the IDAA. So carbon intensity labeling could be harnessed to make sure that CDR is also taken into account, and that also we're expecting a procurement reform, which could reward materials that lock carbon in. And then when it comes to funding, so funds like the Industrial Decarbonization Bank, the Competitiveness Fund, they could be key enablers if CDR is recognized as strategic. And then lastly, the IPCEI might play a role as well. So CDR infrastructure is literally cross-border. So we should make sure that, I mean, there could be an opportunity that an IPCEI is dedicated to carbon management in general, for instance, and CDR could profit out of that as well. But then again, as I was saying, it's a long list of different initiatives. So we had to prioritize internally and to think, okay, of all these different things, what should we or what could we focus on that would lead to highest impact, so to say, and provide the biggest opportunity for carbon removals. So we've landed on 3 main initiatives that we're going to focus on as Carbon Gap. That's the Industrial Decarbonization Accelerator Act, that is the Industrial Decarbonization Bank, and that is the European Competitiveness Fund. I will cover the first one, and then I'll give the floor to Eloisa for the other 2. So the first one, the Industrial Decarbonization Accelerator Act, IDA. What is it? Well, we don't know yet, of course, because we don't have a proposal yet. What we have is a few mentions here and there in the Clean Industrial Deal. But what we understand through also discussing, obviously, with people in the Commission, is that it should be like the muscle behind the Clean Industrial Deal. And the expectation is that, especially for energy-intensive industries, is going to be one of the main initiatives. And as I said previously, that's steel, cement, chemicals, and so on. And what matters very much right now, actually, is that the Commission is gathering input at the moment. So there's a public consultation that is ongoing, and it's closing on the 9th of July. So we aim to develop our position and have concrete recommendations to, how the IDA could include certain elements that would support CDR, and I'll tell you about it in a second. So what are the key or the expected measures under the Industrial Decarbonization Accelerator Act? Again, we don't know much, but what we expect is permitting simplification. So yeah, that's one of the biggest bottlenecks in Europe, so permits. And right now, getting a new industrial decarbonization project approved can take forever. So the IDA, and this is an explicit commitment that the Commission made. So the IDA is expected to change that, to introduce faster permitting for key infrastructure, but also for newer tech. So we are talking about things like one-stop shop, standardized processes. So this is the kind of red tape cutting industry has been begging for a very long time, and our hope is that it's going to be materialized through the Industrial Accelerator Act. Then second, this is what we expect as a big measure would be something around building demand. So market creation for clean products. So it's not enough to produce low carbon steel, for instance, or cement or so on if nobody's buying it. So the Industrial Decarbonization Accelerator Act will try to propose this voluntary carbon intensity label, some sort of like similar to a nutrition label, but for industrial products. And the hope is that this kind of transparency can drive buyers, especially public authorities, to choose a cleaner option. And then lastly, support for priority projects. So IDA aims to identify flagship projects like high cost, high impact industrial decarbonization efforts and help them get over the finish line. That could be early stage funding, that could be loan guarantees, that could be overall political support to speed up things. And yeah, that's what we expect from the IDA. Again, we're early in the process. But when we're trying to put our CDR lenses on and trying to understand, so how exactly can we leverage this opportunity for carbon removal, what we are thinking about at the moment are a few things. So overall integration into industrial strategy as like the general sort of thing. So of course, we aim that carbon removal would not be considered as a footnote or a sideshow, but should be central to decarbonizing some of Europe's most stubborn sectors. And here I'd like to stop and stress that, of course, emission reductions are first and they should be a priority, but there could be opportunities for carbon removal to supplement, complement, support those efforts as well. And we believe that the Industrial Accelerator Act should formally recognize that, and that certain technologies, they're no longer sci-fi, they're existent and they're strategic and they should be supported through this instrument. Then when it comes to permitting, we see an opportunity for carbon removal. So of course, if we want CDR scale, we need to make sure the permitting path is not like a bureaucratic obstacle after obstacle kind of thing. So we hope that getting approvals for transport and injections infrastructure could be smoother for CO2 storage and so on, as it is for renewables or hydrogen. And then lastly, as mentioned previously, this carbon intensity label could be potentially a golden opportunity. And we were talking with somebody at the Commission last week already at quite higher level, and they sort of hinted towards the fact that this could be the CDR opportunity within the Industrial Decarbonization Accelerator Act. So it could include certain products with net zero or negative emissions in the carbon label scheme. In that way, they could reward, for instance, carbon storing concrete or other this kind of innovations. And it would be great to see like a public project that would proudly display that it didn't just reduce emissions, it also locked them away. But in terms of immediate next steps, as I said, let's not miss the moment. This consultation, and it's open, people can just provide their ideas. It's open until the 9th of July. So I'll also share the link with you if you're interested. And the time to send ideas is right now, and to really try to shape the Industrial Accelerator Act before the proposal is out. At Carbon Gap, we are finalizing our position. We're still thinking about certain elements, so we don't have all the answers, but we see opportunities. So we aim to finalize it and to provide recommendations by the 9th of July. And that is why, if you have ideas, if you think some of this could be great hooks, please reach out to us. I mean, we'd love, of course, to hear your ideas in the call and the webinar today, but also later, because we're still in the process of brainstorming and coming up with very concrete, workable, impactful recommendations. So yeah, and we encourage you to do the same, really, to submit your ideas as well. Brussels loves white papers, so let's give the Commission a lot of ideas that they couldn't ignore. So I think this is where I'm done with the IDA. So now I'll give the floor to Eloisa for the next part, which is the Industrial Decarbonization Bank.
Yes, thanks, Rodica. So indeed, the Industrial Decarbonization Bank, another initiative announced in the Clean Industrial Deal, also a complicated name, so I will be calling it IDB for simplification. So in the next slide, I'll tell you more about it. Thank you. So what do we know so far about the IDB? Again, as same as the IDA, we don't know much because we don't have a proposal, but we have some information here and there. So first thing, it was proposed under the Clean Industrial Deal, and it is expected to be governed by the European Competitiveness Fund, which is another fund that I will talk about later. What's the goal? Technically, to maximize emission reduction by closing the funding gap for breakthrough industrial decarbonization projects, so supporting industrial decarbonization projects. How? It will most likely support CapEx and OpEx needs with tools such as carbon contracts for differences. There could be others, but this is what we know so far. The budget has been set at 100 billion. I will show you later a breakdown of it. And we are expecting a proposal for the IDB in Q2 of 2026. So that's quite far along the line. That means that we have time to input, which is a good news as well. There isn't a public consultation yet, only for the IDB, but there are some questions under the public consultation for the Innovation Fund. If that's something that you're interested in replying to, I recommend to look at it. But in the next slide, I will show you a breakdown. So I said 100 billion. I want to stress that this is quite an approximate breakdown because, again, we don't have all the information, but it's good to see where the money will be coming from. So most likely there will be around 20 billion coming from the Innovation Fund, 25 billion coming from InvestEU, 25 billion coming from additional ETS revenues that could be future revenues that are redirected from the ETS to fund the IDB, and probably around 30 billion that will come from member state co-financing, and that will be national voluntary contributions made by member states. So in the next slide, we've actually just published our policy brief, so our position on the IDB. And we looked at it in depth and came up with a series of 5 recommendations that we hope we can put forward and inform the design of the IDB. So start with the very basic one, the very important one is to get the IDB to explicitly include carbon removal in the bank's mandate, obviously alongside carbon management, so obviously CCS and CCU as well, but it is very important that it explicitly covers carbon removal. Number 2 will be to establish a CDR dedicated pilot facility that will be around 1 to 2 billion within the bank to test financing models such as carbon contracts for differences, blended finance, and loan guarantees. And the idea of this is to really set a timeline and see how these instruments are working and how they can be improved to better fit CDR. At Carbon Gap, we also think it's quite important to engage national development banks to really kick off a constructive dialogue within them and the European Commission, and this is really to align co-investing strategies, to standardize the financing structures, to make it easy for the carbon removal ecosystems. And then just to give a bit of a context, of course, the IDB will most likely stand as a program of its own. So it's very important that it's not isolated and that it's coordinated with the rest of the existing funding instruments at EU level. So that will be Horizon Europe, the innovation funds, so we can really ensure that there's continuity in the support across the project's lifecycle. And you will hear me talk a lot about that later on in the competitiveness fund. And lastly, we need to establish an EU institutional task force and financing toolkit. And this is really to leverage internal Commission knowledge and make it easy for the carbon removal ecosystem to understand what to do. So we're talking, yes, toolkits, guidelines, practical templates, anything that can help people understand how to apply it and what to apply to. I think that is it on the IDV. Here you have the link if you want to look into our policy brief. I think we can also send a link. And then I believe we have a Q&A session. So I'll pass it over to Phil.
Fantastic.
Yeah, I think sorry, stop sharing for a second so we can, yes. Okay.
Great. Thank you very much, both. It's been great so far. I think probably like me, everyone else has got quite a few questions. So we've got 1 or 2 to get through here. Hopefully they're as tough as I asked for in the beginning. So we'll go to the first one, which is since Europe outsource most of their emissions, forgive me. Since Europe outsourced most of their emissions for industry, will these acts cover projects outside of Europe so that removal credits can be sold within Europe?
It's a great question. I think, for now, the way that the Commission is thinking about it is really to focus on what's happening in Europe and companies and organizations that are active in Europe. So I imagine for the IDB, Eloisa, please step in, but priority will be given to companies that are inside Europe. And same as I was saying earlier, like the big thing is about to create this whole labeling thing and made in Europe and so on. So it's really focused on that. But at the same time, I absolutely agree with this element that has been highlighted. That and I think it's very important to understand what's happening, for instance, right now when it comes to green claims, for instance, that's and claims that companies can make based on buying credits. And there's the element of international credits that is part of the conversation there as well, and also part of the conversation when it comes to the climate law at the moment, of course. But that's a big separate discussion that it would take hours to delve into. But yeah, going back to your question, for now, these acts are really focused on organizations, companies that are active and are European.
Perfect. Thank you. I feel like you answered that a little bit too easily. Oh, and we've got Rowan as well.
Yes, so I was very interested when both Rodica and Eloisa were presenting about what Carbon Gap is up to. I think for the startups in the audience who are working on this, obviously they have a lot of things on their plate, and so maybe policy isn't going to be something they want to independently help work towards, but how could they perhaps collaborate with what you're already doing to help bolster these case studies that you're putting forward?
That's brilliant. And we actually have a part of that towards the end of our presentation where we have questions for the audience.
Perfect.
That should be answered not necessarily now, but as a follow-up, because as we build our position on the, for instance, Industrial Decarbonization Accelerator Act and other initiatives, we would really benefit from conversations to understand from your perspective what works, what doesn't work, also on funding, on access to different funding opportunities. And I mean, we already try to be as much as we can in touch with people on the ground, but there's always opportunities to do that even more. So would love to hear your experience and also the needs and the issues that you see, so we can have policy recommendations that are informed by reality, of course.
Thank you.
Fantastic. Thank you very much. We've got a couple more to go. I'll remind everyone as well, we've got links have been posted to relevant articles and so on. So make sure you have a look at that in the chat. The next question I feel has some cynicism built into it. And the question is, how do the Clean Industrial Deal, and I will use the acronym IDAA, relate to each other? Isn't this just duplication?
Yeah, appreciate that question a lot, and I think it's a great question. I think we should see the initiatives separate but overlapping, which I know it's confusing, but we think of the Clean Industrial Deal as this overarching industrial strategy. It's the one that sets the vision, it outlines this axis for action, from energy to skill, as explained earlier. And then the IDA and the IDB and the competitiveness funds are the more concrete and operational pillars that really zoom in on particular issues and try to address them. So yeah, it's an umbrella with pillars, or whatever way I probably should have visualized it differently. That would have been helpful. Next time I deliver a presentation on this, I'll think of a better way to visualize it.
Perfect. We do love a good challenge. And to continue with the cynicism, we've got a very tough audience today. I'll combine two questions here. So the funding figures sound promising, but are they new resources or just rebranded existing pots? And latterly, isn't this is terrible, this one, isn't this just more policy for the sake of policy? How will it actually make a difference on the ground? Wow, you are tough today.
For the first one, Eloisa, do you want to give it a go? Otherwise, I can start and you can complement.
Go ahead.
Yeah. So yeah, the funding, are they new resources? Are they rebranding certain things that already exist? And my understanding, at least, it's a mix of both. So we have this figure that is cited a lot, this 100 billion. We also put it on our screen several times. And that includes both existing funding instruments like the Innovation Fund, like InvestEU, cohesion funds, and so on. And also new things like the idea of this new industrial decarbonization bank that Eloisa spoke about, which is something new. So in my perspective, what matters now is to try to ensure that enough of this funding is ring-fenced for industrial decarbonization, for clean tech, and so on, and that accessing it becomes easier, faster, better tailored. So there's quite a few of, in line with our recommendations, I would say quite a few of things that we could try to get the Commission to do to make sure that the money the money is well spent, of course, and in the most impactful way. I'll get back to the other more cynical question in a moment, but Eloisa, do you want to compliment in any way?
I think you've covered it well. I was just going to mention, and I'll mention it when I'm talking about the European Competitiveness Fund. We're also waiting for a proposal on that, so we're not sure what's the budget for that, and then we'll see how much new money is there or not.
Sounds good. And then, Phil, could you repeat the question, please?
I can. It's a great one too. Isn't this, I almost feel terrible asking it, to be honest. Isn't this just policy for the sake of policy? How will it actually make a difference on the ground?
Yeah, I mean, not at all a representative of Commission here to defend what they're doing, but it is the job of the Commission to develop policy, of course. And I mean, at Carbon Gap, we always say that, especially when it comes to CDR, there's so many gaps and there's so many policy gaps. So if anything, not enough policy right now to really support, or not only policy, but actual support mechanisms for CDR. The way I look at the Clean Industrial Deal, of course, the Commission had to come up with a new strategy. So it happens every 5 years, and with the list of initiatives. And if anything, they are going towards more simplification right now, because there's a sentiment that in the last 5 years through the not Clean Industrial Deal, but the European Green Deal, the Commission came up with a lot of initiatives. I remember that summer when in my previous job, I was working on public consultations, and the Commission started like 14 of them at the same time, each of them being a new initiative or a revision of an existing policy. So it was quite a lot. And if anything, now the ambition that we at least see is to try to simplify, to try to focus on certain things. And the aim is really to not create more red tape, but to cut it. Now, will this actually be successful? Let's see. Our role as Carbon Gap is really to try to support policymakers in like achieving this kind of goals, which very often are very ambitious. So yeah, we're doing our best to make sure that whatever policy is put in place is science-based, data-based, but also context-aware and aware of the struggles of the sector and the type of support that is needed.
Perfect. Good. We've got two very brief ones to go, and then we'll move on to the next section. So the next question actually hopefully is quite relevant for the audience, which is what's actually new in the IDAA for companies doing carbon removal?
Yeah, I'll take this one. So yeah, potentially a lot. In reality, I mean, we don't know, of course, because we haven't seen what the Commission is thinking about. We have only a few nuggets here and there in the Clean Industrial Deal where they indicate that we need to create this business case for carbon removal, but they are mentioning only ETS integration, so only compliance. But where we see opportunities is around fast-tracking permitting for projects, like direct air capture and so on. We see opportunities to provide financial support for early movers, and that is not only IDA, but if IDA, I imagine, will be linked with the Industrial Decarbonization Bank. And then we see this labeling sort of initiative that could be very interesting potentially. So yeah, but none of it is guaranteed, of course, unless we push for it and we come up with constructive ideas of how it could actually look in practice. So absolutely aware that the audience is very busy with many different things, and I'm not saying everyone should, get back to the Commission and provide ideas in the public consultation. But if you have some ideas, do share them with us, and we'll be happy to take them into account when finalizing our own position, in the coming weeks.
Perfect. And then the final one, which I think will test you here. What if a company from Asia develops a DAC project in Europe? Can we get benefits from these acts?
Eloisa, does anything come in mind from the funding perspective?
If it's developed in Europe, I would imagine yes.
Yeah, I think maybe the person who posted the question could maybe give some follow-up information. We can come back to it later. But yeah, absolutely. If your entity is within the European Union, then of course you can benefit in the same way as anybody else. If not, then it perhaps gets much more complicated. So follow it up, and we can always follow up with you a little bit later. I've just had another cheeky one coming in, which looks like, and then we'll definitely make this the last one. feel free to the audience, by the way, feel free to ask any more questions, and then we can get to them in the next little Q&A in just a few minutes. So the question is, can the labeling scheme really drive demand for CDR? Do you think it can drive demand for large volumes of removals? I guess that's the all-important question.
Yeah, it's a very important question that we don't have necessarily the answer to it either ourselves, but I think it is the one that we're thinking about a lot. Yeah, we see this voluntary label for industrial products, for instance, steel, cement, and so on, that would show how much CO2 was emitted in the production process, and it could open these two opportunities for CDR. So recognition of products that store carbon and a market signal. So once buyers, and here I think the Commission has in mind, especially public buyers, but maybe not only, so they would be able to compare carbon footprints, but then is as a standalone initiative enough to drive like huge sort of demand for CDR? I personally don't think so. I think it's one of the elements of a bigger sort of roadmap, not a roadmap, but a bigger and like a more comprehensive set of measures that is needed to create demand for CDR. And yeah, we're actively thinking about it at Carbon Gap. And that is why I have to say when the Commission published the Clean Industrial Deal, maybe Eloisa and we were somehow in our bubble thinking, oh, CDR is going to be front and center. And we were quite disappointed, I have to say. And I think our immediate reaction was Clean Industrial Deal, missed opportunity for CDR, something like that. It felt like that. Now I'm not losing hope. I'm trying to find sort of, hooks here and there. But yes, I think the big thing will be compliance. But of course, that's further down the line.
Perfect. Thank you, Rodica. And yeah, missed opportunity for CDR was certainly our grabbing headline, that's for sure. Good. So let's get the presentation back on screen. I can see Eloise has just taken a sip of water, so she should be ready to go. And let's go through the final, I'm going to speak my words slowly because there was a pause there, final section. Thank you, Eloisa.
Yeah, great. So let's go to the next slide. Yes, perfect. So now we're going to dive into the European Competitiveness Fund, ECF for short, because unfortunately for me, competitiveness is a hard word in English. So before I let you into the depths of the ECF, I wanted to first show you in the next slide a bit of context into the EU's funding architecture, because I know it can be quite hard to navigate, and it's important to understand it to kind of really see where the European Competitiveness Fund will sit. So the EU's long-term budget, it's called the Multi-Annual Financial Framework. You might have heard of it, MFF for short. It usually runs for a period of 7 years, so the current one's going from 2021 to 2027. Right now it's around 2 trillion, and it's spread across multiple programs, including the FP. The FP is the Framework Program for Research and Innovation, or as you probably know it, Horizon Europe. Horizon Europe is around 95.5 billion. It is funded by the MFF, but it's a program on its own, and it is the main program that supports research and innovation at EU level. It is not the only program that supports R&I. For example, there's a LIFE program as well, but it is the most important one. So if we go to the next slide, we see what we know about the ECF. Perfect. So what do we know so far? It's a fund it was announced in the Clean Industrial Deal. It will fall within the next multi-annual financial framework, so the next MFF. It will support projects, among others, of clean tech and industrial decarbonization. We don't know much more than that. The funding amount is also to be determined because the proposal is underway, is still not out. In terms of the timeline, we know that the next MFF, the proposal for the next MFF will most likely be published this July, so around mid-July, most likely. But then we will have individual proposals for the individual funding programs that will fall under the MFF, so we will most likely see a proposal for the ECF around September. I think it's important for you to understand what's the current sort of policy debate in Brussels regarding the European Competitiveness Fund, the MFF, and the Framework Program. So it's mostly revolving around the structure of future funding tools. And the question is basically, should the different programs that fall under the MFF be merged into one single competitiveness fund, or should they remain independent? And this includes, for example, should Horizon Europe be merged into the European Competitiveness Fund, or should it still be a thing of its own? The discussions have gone back and forth. We don't really know what's going to happen, but I want to be very clear with this because I don't want to raise red flags that are really not there. By EU treaty, there has to be a framework program for research and innovation. So we will have a program that supports R&I. We just don't know how it's going to look like. To make it more clear, I've tried drawing how it might look like in the next slide. Yes, so there are a few different options, but it's important here because you'll see where the European Competitiveness Fund fits. So we might have an option in where the European Competitiveness Fund, it's a thing on its own, and then the FP10. So FP10 will be the next horizon. Right now we're on FP9. And that's also a thing of its own. Or we could have the case scenario that the European Competitiveness Fund sort of absorbs the framework program, but somehow it still needs to support R&I and beyond R&I as well. It will most likely support higher TRLs. So in the next slide, yes. So we've put some thinking into how we can make sure that the Commission designs a competitiveness fund that is fit for CDR. And we came up with 4 main recommendations. And I really want to stress this, that given the uncertainty about how the funding architecture is going to look like at the end of this process, we're approaching this as principles, right? So principles that we think that need to be there in order to ensure that the funds properly support carbon removal. So the first one is, I'll go one by one. So the first one is looking climate focused. Yes, perfect. So where is this coming from? Basically, we just submitted a response to the MFF public consultation, and there were quite a lot of questions about the European Competitiveness Fund. There's this conversation about whether budgets need to be more flexible, and the Commission should allow reallocation of funds from one priority to another, according to context. And we think that this could further dilute climate funding. So that means that climate funding will not be stable. It could be redirected to other priorities, as we've seen it's already happened, for example, in Horizon. So we don't think this will be good. And also we think that simplification should not come at the cost of a strategic focus. It is of course important, but we still need to ensure that we keep the climate focus and that we keep the proper focus within the programs that are proposed. So what's the fix? First of all, we need to ensure that we ring-fence climate funding, that we make it stable. We need to balance simplification with strategic focus. We need to ensure that however the competitiveness fund looks, it targets all the TRLs. And by that, I mean very early stages and then all the way to deployment. And then we also needed to recognize structural differences. It's very different to be an early stage innovator than a more established player. More established players have more resources to apply, and we know that EU applications are quite complicated. So we need to reduce barriers that prevent high quality proposals from yet under-resourced but high potential actors. Number 2 is that we need to address the funding gap. Yeah, there it goes. We need to bring the technologies from lab to the market. So in very short words, what is the issue? CDR is underfunded. There's a funding gap of around 2.88 to 5.86 billion in early stage carbon removal to address open questions. And we obviously need further funding to then, after developing these technologies, get them ready for market scale. So what's the fix? First of all, we need to increase RD&I funding for CDR. That should be at least 2.6 billion to early stage carbon removal, in part mainly through the next MFF. Then, of course, we need to support the deployment with dedicated instruments, and this could look like an EU carbon removal pilot procurement program. We also have a brief on this that we're happy to share with you in the comments. And for example, what I've already discussed, a CDR-compatible industrial decarbonization bank. And number 3, we really need to make sure that we leverage the full RD&I funding spectrum through, for example, EU CDR missions that can help coordinate the different research questions that fall across different dimensions of CDR, such as ocean, land-based, more engineered methods. And then, for example, CDR innovation partnerships that can pull in public and private resources. And then I wanted to go a little bit into how we got to this thinking, because I know I just said 2.6 billion and I know I just mentioned funding gaps. So the first step that we took as Carbon Gap to be able to answer these questions and approach the CDR funding gaps was to conduct quite an in-depth mapping of carbon removal opportunities at EU level. So we went through all Horizon work programs, through the Innovation Fund, through the LIFE program, really all the main EU funding programs. And we found that around 657 million have been directly dedicated to carbon removal so far. As you see in the figure, Horizon Europe really takes the lead with around 342 million, and then followed by the Innovation Fund, the LIFE program, and then the EIC, which is also part of Horizon Europe. After doing that, we wanted to put it in context and we wanted to understand what was the funding gap. So in the next slide, you will see that we went from global estimates of RD&I funding needs for carbon removal, and then we focused on 2 regions. So the EU, of course, and the US. You can see in the figure that both are below the minimum threshold that is needed to address the RD&I needs, but of course the US has dedicated a lot more than the EU has. So as I said, we estimate that the EU will need to dedicate between 2.88 and 5.86 billions within the next 15 to 20 years to address research and innovation needs and really get the methods ready for scale up. This is not including deployment. That's funding that will come additionally after it. And then, as I said, at least 2.6 billion should be dedicated to carbon removal within the next EU funding cycle. We have a paper on this. If you want to look more into it, our methodology and how we got to these numbers, we're happy to share that with you. Here's the QR code, and I'm sure we can send a link as well. So in the next slide, so this is recommendation number 3. We need to put CDR where it belongs, and that is at the strategic court. If you go through all the EU funding mechanisms and you try to map CDR, you realize that CDR is not really being considered as of now as a research priority. It lacks quite a lot of visibility and coherence across EU programs. And how do we fix that? We really need to start by recognizing CDR as a strategic priority pillar in any future competitiveness fund or in any future framework program for research and innovation. And we really need to try to embed visibility across all relevant programs. And then here we really try to come up with quite concrete recommendations on how this would look like in the programs that already exist. So for example, in Horizon, we could have a CDR as a dedicated destination and not just goals. That will give it a lot more visibility. We can define CDR as a thematic priority in innovation goals. Right now, CDR is not considered as a thematic priority, only CCS. We can prioritize CDR on the LIFE's program's climate actions subprograms. We could have an EIC challenge that is focused only on CDR. And we have quite a lot of ideas about this that we're also happy to share with you. And then number 3, and I think this is very, very important, that the EU really needs to come, just go back, perfect. The EU really needs to come with the formal EU-level CDR research development and innovation roadmap to kind of coordinate and lead the efforts. Here, it's important to mention that DGRTD came up with a report that was last year already, and it kind of looked at all the research needs in order to reach net zero, and CDR was actually mentioned as one area that should be made a research priority. And this is very much the closest thing we've had to an RD&I roadmap for carbon removal, but it's really not enough. They need to be more concrete. We need timelines, funds, budgets, and a lot more coordination. And next slide, please. So in our report as well that I just mentioned, we really wanted to try to provide a framework on how the money for research development innovation should be allocated. So what objectives should RD&I target? So we came up with a framework of 5 categories that we hope can guide how this money is targeted. The first one is that we need to unlock new CDR methods, and that is to increase the diversity of CDR methods that are available. We need to optimize concepts and processes, and that is to get CDR ready for scale-up. We need to, of course, strengthen MRV. We need to advance CDR governance to build some foundations for CDR. And this, for example, includes addressing questions of local impacts, public perceptions, justice, and ethics. And we, of course, need to improve CO2 transport and storage. And I think the next slide has our research gap database. Yes. So we also worked on compiling different resources. So compiling different research gaps that still exists in carbon removal. And we put it all into one big database. I think as of now, it's more than 600, if I remember properly. So definitely check that out. We want to keep it as updated as possible. So feedback is always welcome. And I think we're going to our last recommendation. Yes. So lately, we need to make the system work for climate innovators. And this really means to address structural barriers, which when it comes to the EU are a lot. CDR innovators must navigate fragmented, inconsistent, and administratively heavy processes. We know that the EU funding landscape, it's very hard to navigate. And smaller actors and first-time applicants really face disproportionate hurdles, especially if you don't know Brussels and all that it involves. So what can we do about it? Or better said, what the Commission can do about it? Starting with creating a central access point for CDR. If you really try to map CDR in the different EU funding programs, you will find first that it's really hard. It's all scattered and you cannot find them all in one place. So we think that that's something that will really help the CDR ecosystem that is looking for funding opportunities. We need to simplify procedures for early stage actors, and I think that speaks for itself. Then number 3, it would be important for the Commission to provide tailored support to the carbon removal ecosystem, and that can look like, for example, setting up a CDR help desk and technical assistance facilities to guide CDR potential applicants on how to apply for funding or how to navigate the EU funding programs. We could have, for example, an EU CDR RD&I coordinator, and this is really coming from our work in meeting with the Commission and kind of really realizing that there's not a person in terms of research that coordinates the way carbon removal is targeted across the different work programs, for example, in DGRTD. So the ocean unit does not talk to the land-based unit or to the engineer kind of unit. So we think that will really help, especially as well between DGRTD and DG Clima. Also, improving predictability of the calls is important. So potential applicants can really ready their resources in time and they don't miss application deadlines. And we also find that there's not really an indicator at EU level that tracks how much funding has gone into specific emerging technologies. That will be a good thing to have, good data to have to assess the progress. And then next slide, I think it's our policy tracker. Perfect. So at Carbon Gap, we really wanted to contribute to making this better. So we built a CDR funding tracker, and which is already on our website. We launched it this February, and you can find over 620 funding opportunities, past funding opportunities at EU level and at member state level. And we keep it updated, so you can go there and find what funding opportunities are open for CDR. We help you digest it, and I think it's quite useful. And I've added some that are open that I think are very important to highlight. Yes, so the Commission just published the Current Horizon Europe latest work program. And we have some opportunities for CDR. There's one call for marine CDR ocean alkalinity enhancement. There's one for DAG. The live program as well has an open call. It's targeting different methods, so enhanced rock weathering, biochar, also ocean alkalinity enhancement. And we are currently working on digesting the entirety of Horizon's work program, and it will soon be up in our tracker. So stay tuned for that. And I think I spoke for quite a long time. And we're going for Q&A. But before we get your questions, there's one last slide. We really want to learn from you. So we've got this couple of questions. We would like to know what has been your experience with EU funding research initiatives. It's important for us to be in contact with your experience so we can learn and make sure that our recommendations are fit for purpose. And then we also want to know how we can improve our own recommendations. So we want to know, if you could choose, what would EU funding support for early stage carbon removal look like? Now, we know that you cannot speak here, so we'll have a social media post that will be out in our accounts, and we will really hope that you answer and kick off a conversation and after the session. Please step in, Phil, if I need to explain something else.
This is perfect. Thank you very much.
Perfect.
We'll recap this at the end. We'd love to get your participation. There's a link just been posted to LinkedIn. So please go and comment and answer those questions. So audience questions now. So the first one, what is the link between all of this and the new purchasing program for CDR discussed at the EU workshop yesterday? So it's going to test your knowledge of what the EU workshop yesterday was, both of you. So what is the link between this and the new purchasing program?
Yeah, I would say it very much depends on how the final architecture ends up being and where that program ends up falling. So if it falls within the European competitiveness one, it will also depend how it's funded, then it will obviously be related. If it's a thing of its own, then most likely not. I think what's important to understand is where the money will come from, which I don't think right now we know.
Great, thank you very much. Next question we have, are these calls also opened to EU partner countries, UK, EFTA, etc., or strictly EU member states themselves?
They are open to whoever country is sort of under Horizon. So the UK, for example, is. So it's not just member states. There's a list of countries that are also available to apply, and we have it in our tracker as well.
Seamless. I was about to say, if you go to our tracker, you'll be able to get that information. I believe even get a link directly to the very confusing funding programs. I recently wrote an article on actually how to access EU funding, and as someone who works in this sphere, I thought it would be very, very easy. And I couldn't find the word grant on the page a single time. It was basically impossible. So we've made it nice and easy, hopefully, for you to go and have a look. There's a link to the tracker just on the side. So next question, what other programs are funded by the MFF?
Yeah, that's a good question. Quite a lot. Rodica, I don't know if you can pull the slide that has the figure. So I think because it's better to visualize it. No worries. For matters of time, we had to cut it down, but I'm happy that I can show it.
Perfect.
There you go.
That's the next one, but there we go.
No.
Okay. While Rodica finds the
Yeah.
slide, can you speak more on the DG RTD report that mentions CDR? There's a lot.
Yeah, that's a very important question, and it's a very important report. So this was a report that was published, it was March last year, and it looks at what are the research needs in order to reach net zero by 2050. So it not only looks at carbon removal, but it looks at different technologies and kind of builds a composite indicator considering different criteria, and it tries to provide a prioritization of areas that need the most support. And what we found is that carbon removal actually ranked among the first 25 that need support, especially marine and ocean carbon removal. There was DAGs, there was BECS, there was biochar, and then it goes into specific technologies and it looks at what are the main R&I questions that need to be answered. It sadly doesn't go into timelines and it doesn't go into budget, which is why we think that the Commission needs to go a step forward and really come up with that RD&I roadmap. But it is a very important step. And I think above that, it quite gives political leverage if the Commission it's publicly recognizing that this is an area that they should invest in.
Perfect. Thank you. Did we find what you were looking for?
I hope so. I'll give it a second try. Eloisa, let me know if this is what you had in mind.
The reminder, the question was, what are the programs are funded by the
That's
MFF?
one?
Yes, that's exactly. So this is a figure that we took from the Commission, and as you can see, the MFF is quite extensive. So you can see the Horizon Europe falls under the MFF, but so do others. The Just Transition Funds, so all the cohesion funds and all the regional funds. There are so many. So the European Space Program, InvestEU as well, the Connecting Europe facility, which for carbon removal is also very important because it funds CO2 infrastructure, for example. And then we also have all the cohesion policies, so the Regional Development Fund, the Cohesion Fund, the European Social Fund, and then you have also the CAP, which is a very big bucket. Yes, I think what's important to understand here is that, as I said before, the MFF funds a lot of different programs, including the Horizon Europe, but Horizon Europe is a thing of its own. And if the European Competitiveness Fund is a reality, which will be, it will be one of other things that are funded under the MFF, but some of these funds that you see here might fall within the European Competitiveness Fund. Which ones, we don't know yet.
And Ron?
Yes. So first of all, thank you. And we're so grateful that, you exist to make sense of all this noise, and which to me and probably Matthias as well seems a lot and very complex. So thank you for all of this. I think one question I have, if I were to put like the, CFO or CEO hat on of a startup, is obviously in this nascent market, being in CDR, any non-dilutive type of funding instrument is gold for me right now to make sure that I survive this valley of challenge, let's just call it. So what would you say from your point of view and what you're seeing in these funding instruments that, one, how can I stay on top of things, and how can I make sure to respond in a manner that will set me up for success to getting these grants? Do you have any high-level takeaways for someone listening?
Yeah, those are very good questions. I would say that for number one, in order to stay on top of things, think sadly, right now, you need to learn how to digest how the EU works and how the funding programs work, which is why we try so hard to kind of digest that information for people, or at least provide a guide on how to do so. I know that it's not accessible for everyone, especially, for example, if it's scientists that have never lived in Brussels. Brussels is it's a very small bubble. So I would say right now you need to understand how the EU funding landscape works, and we are actively trying to change that. Our policy tracker, I think it's a good kind of first step that I think if you go there, you can find funding opportunities and it can direct you exactly where you need to go. It might not help you specifically throughout your application, but it will help you identify it. Then I think second of all, and it's important, I think community is important, especially in the CDR ecosystem that it's so small, to really be in contact with people who have tried to apply it or have not tried to apply it, who have been successful or not been successful, because we've talked to a lot of people to kind of to end up with our recommendations, and we found that very helpful. So if that can happen with the CDR ecosystem, I think that it's quite important. And then the second question, can you remind me?
I think you're touching upon it, like
Yeah.
set yourself up for success by asking
Yeah.
others who have done so, and get your foot through the door with digesting the information from the tracker. So that makes sense. I'll just put a plug in here for Remove, that we also enable these ecosystems and make sure key stakeholders are talking to each
Yeah.
other. So definitely reach out to us, and Matthias will say at the end how to do that. If you need to be connected, if you are a CDR startup now and you need to be connected to other startups, we can share more about that. So thank you.
Brilliant. Thank you very much. We've had one very sneaky, but I think quick question that even I could probably answer, which is, can we find EU funding for a UK CDR startup that works in Latin America? We're covering all the continents here.
Ooh, I don't think so.
Fair enough. I think
Maybe if one part of your operations are in Europe, could be.
exactly.
But yeah.
I think you said earlier UK is covered by Horizon, so in theory you could, but I'm sure there are some rules about having.
Yes, about cooperation with different member states.
Perfect. Great. Well, thank you very much for all the questions. Matthias, I think you want to jump in quickly, and then I shall wrap up and say thank you.
Yeah, Philip, thanks. Yeah, I'd just like to thank Rodica and Eloisa for the great session, everyone for the challenging questions. I'd just like to remind the audience that we run these sessions every quarter, because you know how much there is about policy, how much there's to digest about it, and having our expert friend from Carbon Gap doing so, that's a great way to do so. So make sure to follow us on LinkedIn, Remove, and Carbon Gap to stay up to date with the sessions. Also, I know there's some startups in the audience, so I would like to share that we'll be opening applications to our European and India Accelerator program very soon, so stay tuned on LinkedIn. And then as well, if you're itching for some more CDR resources, we have a series of CDR reports and relevant startup resources in our CDR hub into our website, remove.global, so give it a check out. And lastly, if you have any other questions regarding Remove, just feel free to reach out to me via LinkedIn under Mateus. And bring back to you, Philip.
Perfect. Thank you very much. That was an excellent plug, and it probably does away with everything I was about to say. So that's fantastic. And by the way, if there's anybody in the audience who is interested, an incubator program is just the most wonderful way to start, to get support, to get funding, etc. So I would fully encourage you to go and sign up. I think last thing to say, obviously, remember, we are here to help, all of us. And particularly for anyone who's struggling to kind of navigate the funding landscape, go check out our policy tracker. There's a huge amount of information on all the opportunities there. And of course, both organizations, Remove and Carbon Gap, are always available on social media to answer any questions you might have. So for the final time, please give us a follow. And for fear of repeating myself, the video is going to be on YouTube very shortly. So please pass it on to anyone who you think will get value from it. So it's safe to say thank you very, very much, Rodica, Eloisa, as well as Rowan and Matthias, for organizing this on a very regular basis. The sessions are useful, and I think we get lots and lots of views after the fact as well, so they continue to be so over time. So I guess all's left to say is see you next time. Thank you very much.